been discussing the plight of the Egyptian pound, but what about its British namesake? You suggest that sterling is in for some more post-Brexit pain, right?
Yes. Yes, Angie, when I heard your report that the stock market in Egypt was expected to go up because of the Egyptian pound is going down, copy and paste the same story here. You know, the FTSE is at a high because of the pound is falling. I'm sure you've asked a lot of experts about the pound, and there's been a lot of scary stories, but I was trying to look at it from a different way. The twin deficits in the UK, the budget deficit is around 4% of GDP. The current account deficit, which people talk more about, is around 5.7%. So the twin deficits, they aggregate around just under 10% of GDP. And Angie, this reminds me of a currency called the US dollar in 2003 and 2004, when the twin deficit, it was a long time ago, when the twin deficits with the current account and the budget deficit were around 9% of GDP. What happened then? The US dollar had already fallen around 20%, and then it fell another 20%. It was interrupted by the crisis because the money went back into US dollars when the commodity market went down. The problem with the UK is that, and there was something else. The US was able to raise interest rates in 2004 and 5 and 6 to finance the deficit, but not finance the deficit, but to stabilize it. But that's not the case, because Mr. Carney is going to cut rates.
Ashraf, let me jump in here and pick up on that. You think he will cut rates. Where does sterling specifically go from here when you look at the charts and when you look at the fundamentals?
If he does not cut rates this month, he may cut rates later. If he does not, there are some in the MPC that could want to increase a QE. I think on the fundamentals, on the twin deficits, on the political uncertainty that we're seeing, not only in the Conservative Party, but in what's going to happen with the EU, I think we could very well fall below 120 and we could go towards 117, 118. And the technicals are saying that we could probably settle back down towards 125. So the political uncertainty, the interest rate expectations, QE, and the budget deficit, the twin deficit, I think this could be just a warm-up, Yusuf.
One of the busiest men, no doubt, in the UK is Mark Carney, as you've said, Ashraf. Look, he's managing his third week now. He's already injected liquidity. He's already told banks to go out, lend money. He's already said that he's going to loosen monetary policy. And, of course, what is the expectation that he will?
Well, he is saying it, and they're going to do it. It's interestingly, Osborne said, you know what, let's not care about the fiscal conditions, and we are probably going to cut corporate tax from 20% to 15%. And Mr. Carney said, you know, those rainy day, the provisions for the banks, well, the rainy day has come, and you have to lend, and do not keep them for the rainy day. So I think that means more supply of funds in the economy. And, you know, we know what happens, a rising volume of money, the price of money goes down, interest rates expectations will go down, whether they're going to reduce the base rate from 0.5 to 0.25. If they don't do it this time, they may do it later. Some people are saying maybe the pound has not fallen enough for Mr. Carney, so he may actually come in and to reduce that. I just want to say there's something which is, because the minutes of the MPC, they come out with a decision. We're going to see which of the members wanted more QE on which wanted a rate cut. So the expectations are definitely, you know, going to be there, and the downward impact is still going to be there on the pound.
Right. Ashraf, let's get your view on some of the other asset classes, commodities and oil in particular. And for context, we've pulled out the CPF function, which our viewers can easily pull up as well, to get an idea of how the forecasts are developing here. For the third quarter 2016, the NYMEX median forecast at $46 a barrel. Ashraf, do you agree with that view, or are you more on the bearish end here?
46, what a brave forecast, Yusuf. I'm being very sarcastic here. I mean, where are we right now? We are around that level. I think, look, the key, I think whether we're going to hold around 44, I think if we fail that around the 55-week moving average, I think we could probably come back down. And what is interesting is that on Friday, Yusuf, we saw the stock market going up, but the yen is still weakening, but yields are coming down and oil is coming down. So for the cheerleaders in the stock market, they have to watch out from the correlation between rising oil and the stock market. And I think there's a good chance if we do see any negative news from China, which we haven't seen a lot. That may weigh on oil. So watch out. We do think there's going to be a break below 44, and we may go towards the low 30s, Yusuf.
So, Ashraf, how do you play gold relative to your view on oil?
Well, we still like gold, and there is a very interesting thing, a shameful plug. I wrote that in my book in chapter 6, a gold to oil ratio. When gold rises relative to oil, and anybody that is watching the show can do that in the Bloomberg terminal, you will see that as gold to oil ratio goes up, world stocks come down. Okay? So gold divided by oil, divided by the NYMEX, is around a 28. And as gold is going to continue to outperform, copper and oil, the central banks are going to remain at 0 or below 0. The only thing that is going up against gold right now is Bitcoin. As gold goes more relative to oil above 33, I think we could see a downward pressure on a stock. So we still think that gold we are going to see 1450 in gold. But Yusuf, there is something that you need to ask me about. It's called silver, and I like silver better than gold. Gold to silver ratio is still going to go down. There is something about the human nature. Whenever they go into gold, it takes them around 6 months to discover the cheaper cousin called the silver. And the gold to silver ratio, if you chart that with silver, you will see that when gold goes up 6 months later, silver starts to catch up, and that's why the gold to silver ratio is going to go down. So probably the best trades there is to buy silver and sell the British pound.